Well, the global picture remains murky and the cues remain weak. Another day where we saw a 600-point decline on the Dow Jones, the S&P 500 as well as Nasdaq falling anywhere between 3.5% And the biggest reason for that is the spillage that we're seeing in the oil space. Yesterday as well, we were talking about weakness in the May futures. Even June futures for NYMEX have fallen by almost 43%, though some bit of revival seen this morning. Apart from that, we have Brent as well breaking that $20 barrel, currently trading close to that $18.5 mark. So we'll keep an eye out on that. But more importantly, from a larger perspective, three results from the US markets yesterday, or the US companies, will tell you the story of COVID. The first one, we were talking about Coca-Cola. The global volumes have dropped by 25% on account of COVID, so a lost summer for a lot of these companies. The second one was Netflix, where the net additions were close to 1.6 crore. This compares with estimates of only 82 lakhs. So double what the street was expecting, more people watching Netflix as they are home. And the third one is Chipotle, which talks about the quick service restaurants, where the digital sales jumped by almost 80% on account of people ordering in because of COVID-19. So these three will be the big trends to watch out for across the world. Global markets in across the Atlantic, European indices also ended lower with cuts of almost 4% for the German index. Asian markets are more or less mixed as we speak right now, because while the main indices are lower, the Chinese indices are slightly higher. We have Shanghai, which is trading in the green. The SGX Nifty, perhaps on account of the Reliance deal, is currently, while it is indicating a cut of almost 0.6%, we'll keep an eye out on how it opens for our markets.
All right, Mangalam, thanks a lot for that, update. Let's do one thing now. Let's talk about what's likely to be the stock of the day. Reliance. Now, Facebook is going to invest 43,754 crores, $5.7 billion, to take a 9.99% stake in Reliance JIO platforms. SP Tulsian, who tracks the stock, is now joining us. Ms. Tulsian, good morning. Thanks a lot for joining us. Now, this deal was in the works, and there was some buzz of this deal happening, but perhaps it came up slightly earlier than what market thought. But your own analysis of this deal, and how does it add up to Reliance's sum of the part valuation, and what would be your view on the stock now?
See, Anuj, let's first understand the deal contours, because this was expected, and this is what I have been saying for last 1 week when I gave the price target on Reliance Industries at about 13.15 by month end, and I've said that the 8.5 lakh crore could be the market cap, by then. So I was factoring this deal to get happened, and probably this is a time before, ahead of the Q4 numbers, which are likely to get considered by the company maybe with on or before 30th April. So now, if you see this $5.7 billion having invested by the Facebook, they've always been aggressive acquirer. If you recall, in 2014, WhatsApp was acquired by them for 20 billion. In 2012, prior to that, Instagram was acquired by them for 1 billion. So all along, they have been investing in the social platform building, in the social platform by acquisition. And for about last couple of years, they have been looking to build up their own network infrastructure, which they have not been able to. And in fact, in the past, whenever we have discussed these prospects of the Facebook scene coming in, I've said that the US investors are seen now queuing up to make big investments in India in the telecom sector. So this is, I think, and as I said, that Facebook has always been the aggressive buyer. It is in the market, people say that they always pay 120% of the fair value, while Amazon pays 50-60% of the fair value. So yes, I think the $5.7 billion for 10% stake, or for 9.99% stake, has made them the single largest shareholder. And in fact, the value accretion, it is difficult to say that, because if you take the market cap of WhatsApp as of today is $500 million, and they are making an investment in a company having EV of $60 billion, though they are acquiring just 10% stake for closer to about $6 billion. But this can be considered to be an aggressive and big investment for them. But this is the need of the hour for the Facebook, because they wanted to build up the network infrastructure the way they are expanding into the social platform across the globe, and more especially now their focus is more on Africa. So I think this is an excellent fit by this one. And coming on your question of some of the part valuations, again, market have been dilly-dallying. Some analysts have been giving the valuation of 3.5 lakh crore to Reliance JIO. Now all these things will be put behind, and people will take a base case scenario of 4.5 lakh crore as the Reliance JIO valuation as of now. And in my view, things will start accelerating the more this news of this Facebook investment seen having come in, and the ballpark valuation which we have been taking of 5 lakh crore for Reliance JIO stands vindicated.
Okay, no, Mr. Tulsian, the point I'm trying to ask here is this is a follow-up that while yes, the JIO valuations go up quite a bit, is there a problem in the traditional business? And now with crude prices declining so sharply and demand on the lower side, the market will have to take cognizance of that as well.
See, Anuj, you cannot expect all the verticals of the company to do well, firstly on retail and secondly on JIO. And yesterday also in the afternoon, we have talked that the new age verticals, like retail and JIO should be looked into. I agree that the O2C business, their traditional business of refining oil to chemical, refinery and petrochemical, in which Mukesh Ambani has said that they are looking to give 20% stake to Amazon, to Aramco. Let's not call off that deal as well. One may question the valuation of $75 billion earlier expected to be received by the Reliance Industries. But yes, things are seen to be little shaky on the oil to chemical business, maybe on the volume front on petchem and maybe on the margin front for refinery. Refinery will also be taking a hit on account of the volumes because the way we have seen the consumption having going down. But I don't think all those things will get reflected into the Q4 numbers because Q4 numbers are very crucial. One has to wait for the announcements, probably the debt reduction plan or maybe the FY21 net debt by which Mukesh Ambani has said that by 31st March 2021, company will become debt-free on net of cash basis. If those statements are seen standing as of now, that will be seen very positive. But so I don't think that one should really be worried. That may be a cause of concern, but as Reliance Industries never gives the guidance for the forward quarters or for the financial year, I don't think that one can really take a call on Q1 numbers, and I don't think that disappointment will be seen getting reflected in the Q4 numbers on the traditional business of refinery and petchem both.
Okay. Well, Mr. Tulsian, I was coming to the last part of your answer. This is a pre-money valuation, so it looks like it's a fresh sale of equity. To that extent, if you can explain to us how the EPS changes. And I mean, Reliance is not selling out. It is fresh money that Facebook is bringing in. And secondly, it looks like a fairly big tie-up which involves Reliance Retail and other arms of Reliance as well. So can we make any guess at all about earnings contribution in FY21 or FY22 for that matter?
See, Lata, I think if I just focus on Reliance JIO, you are right in saying that this is the money coming into the company. But the way telecom sector is seen to be capital intensive, though the Reliance JIO has virtually completed their capex cycle. But if you are taking a call on 5G, probably you may be requiring an investment of maybe about $15 billion or maybe $8 to $10 billion more in the next 12 to 18 months. So yes, rightly so that the fresh money was required to be coming into the company, and it is coming in the company in that way. In fact, all the financial cleaning of the Reliance JIO books has happened by converting the debt. And if you take the EV of 4,63,000 crore, that gives you a net debt of closer to about 40,000 crore. If I make the reverse exercise of $57 billion as the total equity valuation plus 36,000 or maybe about 5 billion as the debt. So I think that this is the money infusion coming in, and the EV of 4,63,000 crore is seen to be the benchmark, which the valuation can go up further from here. The only argument which goes against the valuation for making it on the downside, that as I said, that Facebook is always termed as an aggressive buyer. But can you say that no, Facebook have been compelled to buy at 120% valuation? I don't buy that argument. Now come on the expected dilution, which Reliance JIO can look to do that in the next couple of years, maybe 24%. So if they have their ammunition in their kitty to go for the mobilization of about 60-70,000 crore further if they wish to, and that completes their target of mobilizing about 1 lakh crore from the asset monetization, which earlier they were expecting from their oil to chemical business. Now come on retail. Retail is totally a different ball game. Now if you take the case of this COVID, the way it has spread and the kind of valuation which has gone up for Amazon, in fact Amazon have given the guidance that they are looking to recruit over 1 lakh people. In fact, the Amazon valuation have seen hit a all-time high in this COVID situation. So Reliance Retail is again a different ball game, but management have never indicated that they are looking to induct or maybe have the strategic investor in Reliance Retail at the current stage. In fact, in the last AGM, Mukesh Ambani have said that they are looking first to induct the strategic investor into the company, that is Reliance JIO. And mind it that Facebook is also seen here as a financial investor, not as a strategic investor. So I think the room is open for Reliance Industries to mobilize further money. And as of now, there is no point in taking sum of part valuation. As of now, one should look for the debt reduction plan of the Reliance Industries, whether they are able to achieve that in the next 12 months or not. And one should take the combined valuation, sum of the part valuation for Reliance Reliance Industries, considering the huge valuation to be seen accruing or flowing to Reliance Retail in the next 24 months, and maybe from Reliance JIO in the next 12 to 18 months as well.
Okay, Mr. Tulsian, good morning. Surabhi here. So I only have one final question after that analysis. Coming back to the traditional business, again we are seeing those reports resurface that the deal with Aramco itself could be delayed because of what's happening in the crude oil markets. Just from a stock point of view, could that be a bigger overhang than the positivity that this Facebook deal with JIO is bringing?
See, Surabhi, again, now presume that the company is able to consummate the deal of Aramco also, maybe say for $12 billion for 20% stake, which earlier they were expecting it to $15 billion. What will they do with that money? Probably not Reliance Industries will be in a hurry, because definitely the things are not going to move up on the Saudis Aramco front, because the way crude is behaving, even they have all their investment plans gone haywire. So yes, the deal will definitely be on the back burner for maybe quite some time, maybe 6 months, 12 months, difficult to say, because it all depends on the situation panning out on the COVID front as well as on the crude front. But I think that once this situation stabilizes maybe in the next 3 months or so, and if we see the crude returning back to a level of, I'm talking the Brent crude returning back to a level of $40, let's not get too much perturbed with the NYMEX crude, having fallen in the negative, because that has to do with the speculative element. The settlement has to happen on that day. But if the Brent crude settles at around $40 in the next 3 months or so, I think again the deal can get revived. But my point, which I've been saying, that eventually you need to look that can Reliance Industries become a debt-free by 31st March 2021 on a net of cash basis. Because if you go by their net debt position, it was at 1,60,000 crore, 2,90,000 crore gross debt and 1,30,000 crore cash and cash equivalent. So I think if you have 50,000 crore or 45,000 seen coming in, one may argue that may not be seen the reduction of the debts, but it is not the point of analysis now whether the money is coming into the books of Reliance Industries. Even the future capex is being met by the Reliance JIO with this stake monetization, part stake monetization. So at least I am quite confident and hopeful, and that's what I have been keeping my valuation not very robust as of this stage. We maintain our market cap target of 10 lakh crore for the next in the next 12 months, but at least for the next 15 days or next 10 days or so, with the expiry of this April series, we are restricting our valuation call at 8.5 lakh crore for Reliance Industries for market cap, which translates into a share price of 13.15. So yes, the uncertainties and the speculation will always remain, that market may always have the apprehensions on the Aramco deal not going through. But I don't think that is the point to be considered, at least for next 4 to 6 months.
All right, Mr. Tulsian, thank you very much for that analysis. It's comprehensive. We, of course, will have Mr. Mukesh Ambani speaking later on in the morning, and we perhaps will have some guidance about what earnings contribution